Yep, I'm prepared. Let's talk about one of my favorite financial topics. Insurance is all about reducing or eliminating risk. So, what kinds of risk can you manage with insurance? For a fee, you can buy a policy to protect your property and physical assets. This is called general insurance. You can protect your car in case of an accident. You can get travel insurance in case you need to cancel a trip you've already paid for. And if there's a fire in your apartment or your jewelry stolen, there's insurance for that too. Insurance can also help protect people in your life. When you're older, your kids or your life partner may rely on your income. You can buy life or health insurance to prepare for the risk that you're unable to earn an income. This could happen if you die or get injured. It can be uncomfortable to think about these things, but it's also good to be prepared. So let's take a bit more time to understand how insurance works. First, you buy a policy from an insurance company to protect the things you care about. Your payments are called premiums, and you are the policyholder. These companies pool the money from all the policyholders. When something bad happens, you make a claim. For example, the insurance companies would take money from the pool to pay you to fix your flooded basement. The premium you pay each month for insurance coverage depends on how much risk you represent for the insurance company. Here's a good example. You may have heard that statistically, young male drivers are more likely to get into car accidents than young females. So to insurance companies, young male drivers are seen as representing a higher risk, which means insurance companies will likely charge higher monthly premium payments for car insurance to young males than young females. The main point is, the higher your risk, the higher your insurance cost. And the lower your risk factor, the lower your insurance cost. The same rules apply to life and health insurance. If you're young, don't smoke, have a safe job, and healthy parents, well, in that case, your life and health insurance will likely be cheaper than for someone who has a higher risk of experiencing poor health. What else impacts the cost of your insurance premiums? 1. The value of the asset you're protecting. The more valuable the asset, the more costly the insurance. Insurance for a house, for example, can be costly. 2. The risk of something happening to the asset or how much it's used. For example, a car used a couple times a week has less risk of an accident than a car used to commute to work 50 kilometers each day. 3. Your personal record with respect to your assets, their loss, and previous insurance claims. If you're making your third claim on your house insurance, your home insurance premium will likely be going up. 4. The type or style of the asset being insured. For instance, sports cars are more likely to be involved in accidents, so insurance for them is often higher. And 5, the area you live in also impacts your premiums. If you live in a high crime rate neighborhood, your insurance rates may be affected too. So, keep these things in mind when you make your financial decisions. You'll want to protect things of value, so be aware of what can impact the cost of insurance. So now you know how insurance can help you be prepared for when things don't quite go your way. I'm not perfect, just insured.